Peace and blessings, fam. I'm Jaden Israel. Welcome to Market Mastery Live. Before we get started with today's live stream, let me make sure everything is okay. I'm checking YouTube Studio. YouTube Studio says everything is all right. Hopefully that's the case. We are live, family. The mistakes are absolutely free. They are on the house, and I'm not going to charge for them. I'm looking out. I am so generous, family. The title of today's live stream: the 3 types of investments smart investors use. I repeat, the 3 types of investments smart investors use. Before we get started, I got some gifts for you. I got some surprises, family. And you can get these surprises below this live stream. Just go below this live stream and click on the description. And when you do so, you get those free gifts. Let me go ahead and share my screen. I'm almost there. All right, family, this is what you want to do. Click on the description, and below you will find these goodies right here. Check it out. Want to build wealth with discipline? Trading Mastery course. My wife and I, we are stock market investors. We teach you a skill, family. We teach you how to earn money in the stock market. And the key is earn. Want to start learning Hebrew? If you want to tap in spiritually, if you like to connect with the language of the Bible, and you like to speak the language that the Messiah spoke, Hebrew Mastery Bundle, recommended. At the end of this course, you will learn how to read, speak, write, and understand Hebrew. All Hebrew courses. We have courses for children and adults and advanced courses as well. Free goodies. Now, here are the free goodies, family. Your favorite F word, your favorite 4-letter F word, F-R-E-E. Let's go. Learn Hebrew and biblical prayers. 30 words in Paleo Hebrew, biblical Hebrew in English, video tutorial, free PDF download. The Lord's Prayer in Hebrew and English, video in PDF. The 10 Commandments in Hebrew and English, video, PDF. The Shema prayer in Hebrew and English, video, PDF. And the priestly blessing in Hebrew and English, the benediction, you guessed it, video and PDF. Kavod, Kingdom Apparel. Check it out. Check this out. Look at this shirt that I'm rocking, family. I'm just stunting on y'all. I'm flexing on y'all. And you know, this is facts. Scared money don't make money. Let's go. One more time. Title out of my way. Scared money don't make money. That's damn right. You can cop this shirt. You can cop shirts on financial literacy and also in faith as well. Faith and finances. You can get that apparel right here. Kavod, Kingdom Apparel. Fam, you can't be broke and woke. I repeat, we can't be broke and woke. There's a lot of wokies that are brokies. Brokey. Kavod, Kingdom Apparel. Support the ministry. The ministry I'm referring to is on Friday. If you like to support the ministry, if you like to support the ministry, family, you can do so through Patreon. We have exclusive content that we're not going to put on YouTube on the Patreon. If you want that behind the scenes, if you want to laugh at my mistakes. Now, those jokes and those mistakes are not free. Also, we have advanced tools, and it's going to continue to get better and better, family. You don't want to miss out on the Patreon. Also, if you'd like to support the ministry, Cash App, PayPal, Buy Me a Coffee, and the YouTube Super Chat are ways you can donate to the ministry. Also, this channel is monetized. For those seeking financial literacy, generational wealth, and spiritual growth, faith, finance, freedom, you're in the right place. All right, family. Also, here's other ways you can connect. Subscribe, Faith-Filled Finances, are ever after. My wife and I, we also speak about trendy news, Black love, and celebrity. Yeah, celebrity news, trendy news, Black love. All right. Now, here's our schedule. You don't want to miss our schedule. If you do, I feel bad for you, son. All right. Below this super cool, awesome banner, you see my wife my better half to the left, and you see her weaker vessel to the right. I'll be here all day. Just scroll down where it says more to get our schedule. Market Mastery Live. That's tonight on Tuesdays. It's going down on Tuesdays. Market Mastery Live, 5:30 p.m. Pacific time. Financial literacy, strategic investing, generational wealth. Kingdom Economics, Wednesdays, 5:30 p.m. Pacific time. Biblical wealth principles and wisdom for financial stewardship. Spiritual elevation service. This is the ministry we are referring to, family. The ministry right here is Spiritual Elevation Service, Fridays, 7 o'clock p.m. Pacific time. Preaching, praise music, and prayer to strengthen your faith and renew your spirit. Motivation Monday, shorts at 10 o'clock a.m. Pacific time. Quick gems to start your week strong. All praises to the Most High. Peace and blessings, Jazz and Jaden Israel. And here are the links once again. And the email. There it is, family. Those are the announcements. The title of today's live stream: The three types of investments smart investors use. This is what we do, family. And we want to be smart investors, right? And let's do what the smart investors, what they do. Let's follow what the rich people do, family, what the wealthy do. And tonight we're going to get into it. This is Market Mastery Live, where we speak about financial literacy and tapping in to wealth. All right. So at this time, I'm going to go ahead and share this legit article. This is not fly by night. We're going to tap into defining three types of investments from Investopedia. Investopedia is a great website. I learned a lot. I love to check it out, family. Make sure you go ahead and check out Investopedia. But before we get into the article, for those coming in, this is what we're speaking about tonight. The three types of investments. Three ways to invest. Three ways to invest. The three types of investments smart investors use. Before we get started, family, I'm just making sure everything is all right on the live. Making sure if the live does skip out, if it skips off, I can make the adjustments right on the spot. Live streams are kind of like baseball games. The batter is he's gonna fix his elbow pad. He's gonna adjust he's gonna do a bunch of stuff. He's gonna spit. He's gonna chew dip. He's gonna chew gum. He's gonna call timeout. He's gonna do all this stuff. So it comes with it, family. I just want to make sure that we are okay. Let me make sure this live doesn't skip out. I've learned from experience.
I emphasize again.
Awesome. Okay. Now let's get started with tonight's live. Three ways to invest. The three types of investments smart investors use. That's right, fam. This is from Investopedia. Investopedia. Defining three types of investments: ownership, lending, and cash. Ownership, lending, and cash. Already dropping value from the beginning, right from the title, family, right from the get-go. Defining three types of investments: ownership, lending, and cash. This article was written by Andrew Beatty, updated March 13, 2023. So it's fairly recent. Here's his bio if you want to go ahead and check him out. This article was also reviewed by Andy Smith. If you'd like to check him out, go right ahead. And this was fact-checked by Timothy Lee. Defining the three types of investments. The term investment has become muddled with overuse. Let me see if you guys can see. Let me go ahead and blow up the screen just a little bit more. For my sake. I don't know about your sake, but I need it for my sake, family. Playing, family. My bad, family. If you missed that, bad. I clicked the wrong button. It's been said that I need glasses. I say, screw them people. I don't need no damn glasses. I'm fine just as I am. But I'm going to go ahead and blow up the screen. That way I can see it and we can all see it. Let's go. The term investment has become muddled with overuse. A stock or a bond is an investment. People are now encouraged to make investments in their education, their cars, and even their flat screen TVs. Talk to me. All of these things may sound financial sense. All these things may make financial sense, but strictly speaking, they are not investments. No matter what the commercial says, no matter what the commercials say, there are only three basic categories of investments: ownership, lending, and cash equivalents. There's only three types: ownership, lending, and cash equivalents. Oh, we making it plain, family. You know how we do. We ain't speaking over nobody. We keeping it plain, like Wonder Bread, slapped on, homemade, cheeseburger, beef patty, this fat, with some gutman cheese slapped right on top. Wash it down with some sweet ass Kool-Aid. Ooh, I miss those days. Let's make it that plain. Let's go, fam. They are products that are purchased with the expectation that they will produce income or profit or both. I'm going to highlight this whole area. These are investments. These are the three types right here: ownership, lending, and cash. They are products that are purchased with the expectation that they will produce income or profit or both. Key takeaways: stocks, real estate, and precious metals are all ownership investments. The buyer hopes that they will increase in value over time. Lending money is an investment. Bonds and even savings accounts are loans that earn interest over time for the investor. Cash equivalents, like money market accounts, are easy to liquidate when needed and repay investors with a modest amount of interest. Number one, ownership investments. Let's go, fam. Ownership investments are the most volatile and profitable class of investment. The following are examples: stocks. Owning stock means owning a portion of a company. Hold on. Let's slow down. Let's slow down the tempo. Let's take our time. Let's read the way we drive. Safe, right? Right? Hopefully. Not all of us. Owning stock means owning a portion of a company. When you own a stock, you own a portion of a company. You own a part of that company. It may be a minuscule stake, but it's ownership. More broadly speaking, all traded securities, from futures to currency swaps, are ownership investments. Investors purchase them to share in the profits or because they will increase in value, or both. Some of these investments, such as stocks, come with the rights to a portion of the company's value. Others, such as futures contracts, come with the right to carry out a certain action that will benefit their owners. Your expectation of profit is realized or not by how the market values the assets that you own the right to. If you own shares in Apple and the company posts a record profit, then other investors are going to want Apple shares too. That's right. Their demand for shares drives up the price, increasing your profit if you choose to sell the shares. There are two main ways to make money from stocks. There's two main ways to make money from stocks. Two main ways, family. What are these two main ways? Let's go. Number one, capital gains. When you buy shares in a company, the aim is for them to increase in value so that you can one day sell them for a profit. If, for example, you bought shares in Walmart at $120 a piece and then sold them 5 years later at $160 a piece, you would have made a $40 profit on each share. This profit is called a capital gain. Boom. That's a capital gain, family. I strive to share information at a third grade level, family, so I can get it. Let's go. Dividends. Dividends is the second way. The second main way to make money from stocks. The first main way is capital gains. The second main one is dividends. Companies often opt to share some of their profits with shareholders via a cash payment called a dividend. Got a highlighter ready? Write it down, take a picture, screenshot it, do what you got to do, fam. We're getting this game right here. Companies often opt to share some of their profits with shareholders via a cash payment called a dividend. For each share you own, you'll qualify to receive a certain amount of money. Some companies pay higher dividends than others. Usually, those that need to invest a lot to remain competitive and expand pay little to no dividends. Conversely, big and stable companies with plenty of excess cash are more likely to share their profits with investors. The frequency with which dividends are distributed varies. Some companies pay them quarterly, whereas others make these payments every month, once a year, or only on special occasions. Warning: investors generally love dividends. I repeat, for those who came in late, I still see you. Even though you're way up there in the bleachers, I got you. Investors generally love dividends, so paying them boosts share prices. However, there is always the risk that the company runs short of funds and is forced to cut or completely eliminate the dividend. When that happens, the share price usually falls. So dividends is cool, family, but there's a warning to it. Just something to keep in mind. Business. And remember, we're under ownership. We're under the first way. The first type of investment. We are under the first type of investment. So far, we've covered stocks. With stocks, there's two main ways. To make money from stocks: capital gains dividends. Now, under the first type of investment, we also have business. Business. Let's go. The money put into starting and running a business is an investment. Entrepreneurship is one of the toughest investments to make because it requires more than just money. That's big facts. Big facts. That's why, family, you got to tap into Kingdom Economics. Kingdom Economics, tomorrow on Wednesdays, we speak about biblical principles on wealth and wisdom on wealth. We combine finances and faith. We drop gems. We read the gems from the scriptures to lead us into being wise investors. Becoming an entrepreneur involves more than just money. Big facts. By creating a product or service and selling it to people who want it, entrepreneurs can make huge personal fortunes. Bill Gates, founder of Microsoft and one of the world's richest men, is a prime example. Real estate. Real estate also is under ownership. Under the ownership investment. The ownership is the first type of investment. So far, we've covered stocks, we've covered business, and now we are covering real estate. Houses and apartments that are purchased to rent out or resell are investments. The house that you live in can have multiple purposes. It fills a need for shelter. It may appreciate in value over time, but it may also lose value, depending on market conditions. In essence, the house that you live in not only provides basic necessities, but also may be a source of income that can be realized when the house is sold at a profit. Important. Anything that declines in value with use is not an investment. It's an expense. Family, this is a repeater. This is a what, Jaden? This is a repeater. Anything that declines in value with use is not an investment. It's an expense. Many people make the error of purchasing homes that they could not afford on the assumption that those houses could soon be sold for much more. Now, we are under the fourth type of ownership: precious objects and collectibles. Gold and precious gemstones, impressionist paintings, and signed LeBron James jerseys can all be considered ownership investments, provided that these objects were bought with the intention of reselling them for a profit. So that LeBron James that you wore about 20 times is probably not an investment. The Michael Jordans, the sneakers that you wore about 20 times is probably not an investment. However, if they're in mint condition, they haven't been opened, then there's a chance, a good chance, that it's an investment. If it's in mint condition, it hasn't been worn out, even if it's been used, it still can be considered an investment to a certain degree. For example, Etsy. I'm thinking Etsy. My bad, family. I'm tripping. The other Etsy. eBay. There we go. eBay. If you got some used stuff laying around the house, and hey, It's in good condition. It may not be perfect condition. It may not be mint condition. It may be open. However, it can still have value to it. Now let's continue. Let's go. Like any investments, they may rise or fall in value over time. Tastes in arts and collectibles change. Gold and gems have market values that fluctuate. From the view of the investor, they also have costs. They must be insured and kept in pristine condition to retain their value. Number 2, lending investments. So far we've covered ownership, investment, family, ownership is the first type of investment. Through ownership, you can gain ownership through stocks, business, real estate, collectibles. And precious objects. Number 2, the second type of investment smart investors use. Lending investments. Lending money is a category of investing. The risks generally are lower than for many investments. Consequently, the rewards are relatively modest. For example, a bond issued by a company or a government will pay a set amount of interest over a set period of time. The only real risk is that the company or governments will go bankrupt, in which case the bondholder may get little to none of the investments back. Savings accounts. A regular savings account is an investment. That's right. Let me go ahead and highlight. Savings account. Let's go. A regular savings account is an investment. The investor is essentially lending money to the bank. The investor is essentially lending money to the bank. The bank will pay interest to the account holder and will earn its profit by loaning out the rest of the money to businesses at a higher rate of interest. The return on savings accounts is quite low, but the risk is essentially zero. In the United States, savings accounts are fully insured up to $250,000 by the Federal Deposit Insurance Corp, FDIC. If you heard that term, I'm just playing. FDIC. I'm seeing if y'all listening. I will be checking up on you now. Don't sleep, fam. Don't be falling asleep, fam. This is valuable information, fam. If you heard that term, FDIC, this is what it stands for. The Federal Deposit Insurance Corp. Savings accounts in the United States are fully insured up to $250,000, which is $250,000. Bonds. A bond is a loan. You ever wonder what a bond was, fam? This is what it is. It's a loan. A bond is a loan. Turn to your neighbor and say, a bond is a loan. A bond is a loan. When you purchase a bond, you are essentially lending money to the issuer, which could be a company or the government. When you give a company or the government a loan, that is called a bond. And they will pay you back with interest, or coupons as they are called in the bond industry. The primary risk is that the entity in which you are lending money goes bust and is no longer able to pay back what it owes. The greater the possibility this will happen, the lower it would usually be rated and the higher interest it will pay. That's a repeater. The greater the possibility this will happen. What will happen? The entity in which you are lending money goes bust and is no longer able to pay back what it owes. The greater the possibility that this will happen, that they will fall apart, the lower it will usually be rated and the higher interest it will pay. Generally, the safest option is United States Treasuries. Generally, the safest option is U.S. Treasuries, which are money lent to the U.S. government, followed by state and city government bonds, then bonds issued by companies. Bonds also differ in terms of length or maturity, or if you want to sound tight, maturity. Some of these loans will be short term, paying back the investor within little time, whereas others may last over a decade. Generally, the sooner money is due to be paid back, the lower the risk and the less the investor stands to earn. In some cases, bonds may also be callable, meaning the loan can be paid back in advance before it is due to expire. Callable, meaning the loan can be paid back in advance before it is due to expire. Companies and governments may include this provision if they believe interest rates will fall in the future and borrowing will become cheaper. Tip: risks and returns vary widely among the different types of bonds. Generally, the higher the perceived risk of not making good on the loan, the more the entity must pay investors in the form of interest. We appreciate it, family. Go ahead if you like the information. If you're getting value from this live, go ahead and hit the like button. We appreciate it. If you are getting value from this live, go right ahead and smash that like button and smash that subscribe button. The three types of investments smart investors use. The first type we've covered, which is ownership. The second type we are covering right now, which is bam, loans. Whoops. Lending. Third type. Now we're on the third type of investment. The third type of investments. The first type is ownership. The second type is lending. The third type is bam, cash equivalents. These type of investments are as good as cash, which means that they can be converted back to cash easily and quickly. Money market funds. Money market funds are to savings accounts and can be purchased at a bank or credit union. We highlight that. That's a highlighter right there. Money market funds are similar to savings accounts and can be purchased at a bank or credit union. The difference is that the investor commits to leaving the money alone for a period of time in return for a slightly higher rate of interest. The time period is as little as 3 months and no longer than a year. Money market funds are more liquid than other investments, meaning you can write checks out of money market accounts just as you would within a checking account. However, once you start writing checks on a money market account, you've erased much of its value as an investment. These are not investments. Right here, these are not investments below. Education. Education is often called an investment, and it certainly can have lifelong rewards that include a higher income. It could be argued that we sell our education as if it was a small business service in exchange for a steady income. But this logic, we're investing when we buy a stress ball or a cup of coffee. These are goods that offer benefits, but they are not investments. Family, if you agree or if you disagree, this is what Investopedia is saying. As it is even mentioned right here, it can be argued. So you can see the degree of what's the word I'm looking for? Objectivity. It says it could be argued. But many out there, I believe, would agree with this article that student loan debt ain't no damn investment. But shout out to you if you have student loan debt. We will pray for you. That sucks. That sucks. That sucks tremendously. Student loan debt is there's a lot of Americans that have that debt, family. So if you have it, my heart goes out to you if you have student loan debt. But according to Investopedia, they're saying education is not an investment. Consumer purchases, beds, cars, I repeat, beds, cars, mobile phones, TVs, and anything else that depreciates in value, which means the value goes down. The value goes down. Appreciate, the value goes up. Depreciate, the value goes down. And anything else that depreciates in value with use and time are not investments. You may spend more to acquire something of higher intrinsic value, but once you've used it, it's still used goods. What are junk bonds? Junk bonds are bonds deemed more likely to default, meaning that the company or government's issuing it has a higher chance of not being able to pay back the money it is lent. Junk bonds are usually given low credit ratings, and buyers are compensated with higher interest rates. Entities in this position need to pay investors more because they represent a greater risk of default. Boom. What are the safest investments? Parking money in a savings account is pretty much risk-free. U.S. bank accounts, including savings accounts, are fully insured up to $225,000 by the FDIC. What are the riskiest investments? Every investment is different and can be dangerous to categorize certain asset classes as safe or risky. For example, a lot of people say bonds are safer than stocks, even though some fixed income investments, such as junk bonds, may be riskier. Yes, I hear this said so much, that bonds are safer than stocks. I hear this said a lot, family. But let's get into this. For example, a lot of people say bonds are safer than stocks, even though some fixed income investments, such as junk bonds, may be riskier. Generally speaking, the riskiest investments are the speculative ones that offer potentially mammoth returns, big returns. That could be a startup, a cryptocurrency, or something else. The higher the risk, the higher the reward. I'm paraphrasing. Now, here's the bottom line. Like Stone Cold said so. And that's the bottom line. Here's the bottom line, family. Let's get it. Investment is a word commonly used to describe the acquisition of pretty much anything that is assumed to save the owner money in some way, such as fuel-efficient cars and solar panels. In reality, anything that loses value should not be categorized as an investment. Instead, an investment is something that is purchased with the expectation that it will rise in value. You know what time it is? If you missed anything, don't miss this right here. An investment is something that is purchased with the expectation that it will rise in value. Investments can generally be broken down into three categories: ownership, lending, and cash equivalents. Ownership covers stakes in companies, setting up a business, real estate, and precious objects and collectibles. Lending, on the other hand, includes savings accounts and bonds. Cash equivalents include money market funds. A smarter way to invest in alternative assets. With a self-directed IRA from IRA Financial, you can invest in alternative assets without capital gains tax. Investment fees are asset value fees. This is their advertisement right here. I'll go ahead and read it. I'll just go ahead and read it out. This article is dropping so much game. I'll just go ahead and read it. Join 25,000 plus investors nationwide using IRA Financial to diversify beyond Wall Street. See if you are pre-qualified in just 60 seconds to get started. Take the next step to invest. And that concludes the article, family. We're going to land there. Article sources. Boom. All right. To run that back, family, what are the three types of investments? I repeat, what are the three types of investments smart investors use? One more again, fam, what are the three types of investments smart investors use? That's right. Ownership, lending, cash equivalents. Ownership, lending, cash equivalents. One more time. The three types of investments smart investors use. Number one, ownership. Number two, lending. Number three, cash equivalents. 3 ways to invest. Three ways to invest: ownership, lending, cash. Ownership, lending, cash. That sounds like a song, don't it? Ownership, lending, cash. Ownership, lending, ownership, lending, cash. Ownership, lending, cash. Ownership, lending, cash. Hey, ownership, lending, cash. That's right, family. The 3 ways to invest, the 3 types of investments smart investors use: ownership, lending, cash. Ownership, lending, cash. That's right. So those are the 3 types of investments, family, that smart investors use. And as wise investors, let's diversify our assets. Let's not put all of our eggs in one basket. Let's not lean on just one investment and only one type of investment only. Diversify. Don't just rely on ownership. Don't just rely on stocks in ownership. Tap in to diversification. Do not just rely on one type of investment only. Let's diversify our investing, family. There's multiple ways of getting this paper, and ultimately, we need money to survive. We need money to survive. And you know what? They say love is free. I disagree. They say love don't cost a thing. Hell yes, it does. Marriage costs money. Love costs money. And we got to tap into this money, family. We got to tap in not only to get married and to provide for our spouse, but also to leave a legacy to our children and to our grandchildren, and in order to do that, family, we have to seek wisdom. We have to look for the wisdom, the information, the knowledge, the wisdom, and the understanding. We have to tap into those things, family. We have to tap into knowledge, wisdom, and understanding, not just in how many scriptures you know, but tapping into providing a better life for our children and for us too. And I just wanted to share that, family, tonight. Thank you for joining me tonight. Those are the 3 types of investments smart investors use. I will see you tomorrow. That's the plan. Nothing is guaranteed. Even investments are not guaranteed. The higher the risk, the higher the reward, generally speaking. And apologies for that, family. Sorry about that. I was just making sure we was okay. I thought I jumped off on the live. No, we're okay. But yes, tomorrow I'm going to be going live. That's if, hey, everything's a gamble. Everything's a risk. Well, not everything. Some things are not investments, as we read tonight. But you know what I'm trying to say. Tomorrow is not guaranteed, but we are scheduled tomorrow for Kingdom Economics, where we will be speaking about biblical principles on wealth and financial stewardship. We get this information from the Word, from the Bible. Now, Market Mastery is our new show. This is our second episode that we have done. So if you've followed me for years, you've been following me, family, for some time, we're changing the brand. The brand has upgraded. We have expanded. Let me go ahead and share with you our brand, our direction on where this channel is going. This channel is appreciating. I see what I did there. Let me go ahead and share this before I head on out. Let me share my screen. And this is for those who are just wondering, Jaden, what's going on? Are you all right, Jaden? Everything is all good. Everything is Gucci. Okay, so this is what you want to do. Here is the vision. Here is the direction. Right here. Faith-Filled Finances is the name of our channel. This channel has been rebranded. We have went through a rebrand. We have made some changes. And these changes were needed. Change ain't always bad now. Change definitely is good for this channel. This was overdue. Faith-Filled Finances. Welcome to Faith-Filled Finances, where faith and financial wisdom come together. This channel is dedicated to building generational wealth, teaching financial literacy, and cultivating spiritual growth. Rooted in Scripture, we show you how to steward resources wisely while growing spiritually, financially, and personally. If you're seeking financial literacy, generational wealth, and spiritual growth, you are welcome here. The mission: faith, finance, freedom. This is the mission. And this is for us all, family. And check it. I love our community. I love the Black community. But check it, family. Financial literacy is for everybody. Health, wealth, and relationships is for everybody. Salvation is for everybody. And I say this out of love as a mulatto, being mixed, being light-skinned. I love our community, but I love everybody, family, all nations and all groups of people, no matter what their religion is, or what their nationality is, or what denomination they're in. This channel is heading upward. And my wife and I, we are so happy for this change. We've been talking about this. We've been planning this out. And I got tired of the old direction of this channel. It needed an upgrade. And here is the upgrade, our schedule. Market Mastery Live, Tuesdays, 5:30 p.m. Pacific Time. Financial literacy, strategic investing, generational wealth. Kingdom Economics, Wednesdays at 5:30 p.m. Pacific Time. Biblical wealth principles and wisdom for financial stewardship. Spiritual Elevation Service, Fridays at 7 o'clock p.m. Pacific Time. Preaching, praise music, and prayer to strengthen your faith and renew your spirit. Motivation Mondays, shorts at 10 o'clock a.m. Pacific Time. Quick gems to start your week strong. All praises to the Most High. Peace and blessings. Jazz and Jaden Israel. And if you'd like to go ahead and start with ownership, you can tap into the trading course recommended. This trading course right here will put you on the path to ownership. My wife and I, we are stock market investors, and it is a skill that we must tap into. It's not even optional. It's something we have to do. We have to have more than one income, family, especially in today's time. The American dream is the American nightmare. There is no American dream. There is no American dream. And if there was, it ain't around no more. That dream is now a nightmare. So we have to do our part. We have to look into other ways of getting this paper. Scared money don't make money. Scared money don't make money, family. So I just wanted to give you an update on that, family. Just if you're wondering what's up with Jayden, ain't nothing wrong with me, family. Ain't nothing going on. We elevating. You know, if you followed this channel before, you've noticed that I made some changes around here. Some things had to go, and that's, hey, sometimes, family, you just got to make those changes, even if they're uncomfortable. Sometimes change, it doesn't feel easy. Even to a certain degree, some of the changes that I've made, it didn't feel comfortable. My wife is a witness. It feels a little strange making those changes, but they were needed to do so. And family, if you're wondering about my older content, you notice I've been taking down videos and taking down live streams. I still have them. I've archived them for now, and I'm going to post them. I'm not going to post them here on this channel. I'm going to either put them up on the Patreon, or I'm going to put them in another area where if you want to see some of the older content, you can. But if you've been looking for my content, you can't find it. I didn't delete it. I just shelved it. I put it in storage because of the direction that this channel is going. So those are the three types of investments, family. Let's get this information, but not only get the information, but let's apply the information. Check it. Knowledge is great, but you need the wisdom. Wisdom is the skill. Wisdom is the application. It's the skill. Wisdom is like a skilled warrior in combat. Wisdom is like a trained killer. Wisdom is like a trained ninja. And understanding, the knowledge, the wisdom, and the understanding. Understanding is discernment. You're able to, with discernment, you're able to make wise judgments, and you're able to separate what to do and what not to do. What to keep and what to throw away. So let's tap into this knowledge, wisdom, and understanding, family. I'd like to thank everybody listening in the chat and everybody online. I'm Jaden Israel. Until next time, peace and blessings, fam.